Welcome to OK Computer. Now, interestingly enough, okay, so this is meant to be an audio format here, but look at all these cameras that we have around here. So all of a sudden, it's become like a video. Oh, Joe, don't do that. We're trying to keep people. We're trying to keep people on the
I'll block it.
YouTube channel here.
Video's moving pictures, right?
Yeah, it is that. I am Dan Nathan. This is Packy McCormick. Joe Marchese. For the first year, I kind of mispronounced your name as you would come on the podcast.
Very proud of you.
So Human Ventures, you are the build partner over there. Our listeners know you, and our listeners obviously know Packy McCormick. Not Boring Capital, Not Boring Newsletter, which is approaching 200,000 subs, which is absolutely amazing. I think I first heard you on a podcast. I think it was with Josh Brown and Michael Batnick. And I think at the time you probably had like single digit thousands like subscribers, probably at least a couple of years ago. Does that sound right?
That sounds right, yeah.
And I just like, as soon as I started reading it, you were doing a lot of Web3 stuff, and it was really brilliant. Just to me, as a normie, is that what we call him, Joe? You had other names for him back then, actually. You definitely did. Just the way you broke down a lot of the concepts I thought was really fascinating. So that was great. And Joe, you're like a bit of a newsletter writer now. I just saw Human.ai. This is a post that you wrote over the last week or so, and I thought it was really interesting. I actually wanted to get the two of you guys together because, you know, Packy, you wrote this post, I think it was March 27th, OpenAI's ChatGPT plugins and the emergence of an Apex aggregator, and I read it and I actually quoted it on a pod. And then Joe, you wrote last week, Human.ai, how to think about the impact of artificial intelligence on brands, commerce, and culture. And both of them had a really hard attention bent to them, okay?
Yep.
So I wanted to get you guys together here, and we're here.
Great, here we are.
Before we jump into the AI stuff, we're definitely going to do a little Elon at the end of it because you and I have not potted in a while. You and I have potted recently. Elon kind of comes up a little bit on our podcast.
It seems to with you.
Jeez.
I'm not looking forward to telling you that you were right, but.
Oh, see that? You see what Packy? No, but I think you and I had one last year. We were talking about, listen, one of the things about him in general is I think that a lot of people, and you are optimistic, and you tend to be very optimistic about tech and about trends in tech and everything like that. And I'm just like, I've seen this guy before, okay? Like, that's my only bit. Well, I've seen him in really bad TV shows. I've seen him in bad movies about markets and selling shit or whatever. It's no different this time with this guy. I know that the difference is that some of the companies that he's running, I don't mean started, some of the companies he's running, are doing kind of cool stuff. He just bought one that he's running into the ground, so we're going to get.
So you just couldn't help yourself, so we're going to start there.
Yeah, no, we're not going to start.
Moving on.
Yeah, I should hold off.
But you know it's funny, Joe. Like you are somebody when you actually put pen to paper and you start writing something, you've given it a lot of thought. You know what I mean? And I don't mean to imply that you don't either. I am just a walking, talking hot take machine, whether it be podcast, TV, this, that, whatever. You spent a lot of time thinking about this, and you wanted to be thoughtful because over the last few months, this ChatGPT came out late last year. A lot of people had lots of takes on it. There was a lot of ink spilled on it, but you waited a few months. What were you trying to work up to, to your piece last week?
Yeah. I mean, so first I'll take exception with that. I'm not a writer or a newsletter writer because it took me weeks and weeks and weeks to write this one piece that is about half the length of one of Packy's. And I've read
half the length is a good sign.
With like half of the references. Like I had some very good friends in writing. My first pass through. So David Gellis from the Times and Naima from Kara Swisher's partner helped me edit it. And after the first few edits, I was like, wait, I don't want to rewrite that much. How is that? No way. They're like, well, you don't just stream of conscious. So no, not on the writing. But the reason I took the time was because I had been for the last decade on this bent, which I thought was bizarre that I had to like carry this flag, was that attention was the only thing that mattered in advertising. Because you could have all the data in the world, but without someone's attention, you can't convince them of something. But you could have zero data, but with their attention, you could still tell them a story, even if you didn't know who they were. So attention was primary and data was secondary, but data had taken all the oxygen out of the room. So for a better part of a decade, AI was just used to get people's attention and turn it into ad dollars. Show the next video, recommended products, advertising, dynamic ad creative, search results. And for the first time in my time in tech, AI was going to be used to potentially disrupt the entire basis of the business model of the internet, which was advertising. And so that was just, it was bizarre to me to start watching.
For decades, so you write, for decades it had been used as such, but you didn't call it AI in the advertising business, right? Like what would you guys call it?
They would call it machine learning. Yeah. They would call it programmatic.
Yeah.
They did call it AI though. I mean, think about it. We all famously know the TikTok algorithm, right? Yeah. The TikTok algorithm is under trial basically in the court of public opinion and then pretty soon in the real courts. So we all did call it an algorithm that was deciding what you watch next. So AI to direct our attention to other people's content creation.
Yeah.
And now this is the first time it's going to be AI to direct us to AI created content. And that, I mean, we'll talk more about
Yeah, but so I'm sure Gellis wrote this line, the amount of attention the amount of attention humans have is finite, but the attention can be turned into is infinite, right? So
I can't remember which one of us, which one of our two
highlighted
writing
that one.
geniuses.
That was a great line.
Yeah, no, it was a really good line. But Packy, you know, you actually, I think what really got me going about your post, and you had been writing about it, and I know you've been writing about AI for you know, not just a hot minute here, but you really got excited about the plugins and really like the nature of the platform aspect of it, right? And so when you think about a lot of the stuff you'd been writing about over the last couple of years as it relates to Web3, it really is about like, you know, different platforms, like, right? Like distributed platforms. Talk to me like what has really gotten you so excited about it.
Yeah, so I'm kind of this walking stereotype of tech guy where I read about Web3, now I read about AI, but it is like...
I hope that's not how I framed it.
No, this is literally the way that I feel when I think about how other people probably think about me. But what I've said kind of the whole time writing about Web3, about AI, and I've been writing about AI for a little while, wrote about scale a couple of years ago and all of that, but it is the business model innovation. Like I love the tech stuff. I love playing around with all these different tools, but the business model innovation made possible. And when you look at, I mean, ChatGPT has been fun. Don't see how you turn it necessarily into a business. They had the APIs. They were fine. I remember talking to somebody at OpenAI when DALL-E came out, and they were still unsure exactly how they were going to turn it into a business. And then you see plugins, which let people essentially design apps that literally plug into ChatGPT, and then you can just type to it, and it'll go do these things for you, at least take you to the site. Then that was the first time that I was like, holy shit, like this is a complete business model game changer. Because for the first time, I mean, we're talking about attention here, they have 100 million eyeballs, and now it's probably hundreds of millions of eyeballs on ChatGPT. Developers want to plug their thing into this magical new thing, and they can turn that attention now into actions, right? And so like, instead of saying on Google, I want a flight, and it takes you to 5 different websites, you say, I want a flight, and it's like, cool, I'll book that flight for you. It doesn't do that right now. They're playing nice with partners. This is always what happens in the beginning of platforms. But it's very clear that over time, you'll just type into whether it's ChatGPT or whatever else does this business model in the most ruthless way possible. You type it in, it finds you the cheapest flight, can look through a million parameters that it's learned matter to you, and just book the very best thing for you. And that's incredibly disruptive to a bunch of different internet business models.
But that is so that example, I used to use this example before this wave of AI, where I would say, I don't want to shock anyone, but William Shatner did not negotiate your hotel room in the early 2000s. The Priceline Negotiator was a brand, and it started at the top of funnel. Yeah. And why did they need to do that? Well, because when I search on Priceline for a hotel room or a flight or a car, and it gets to the bottom and it says, okay, we found you a flight for $279. How do I know that's the cheapest? There needs to be trust at the end. Yeah. I need to say, I know
that Bitcoin fixes this?
Yes, definitely. Put it on the blockchain. No, but when it gets to the bottom, you have to decide, do I trust? Yeah. But this is what we're dealing with the large language models right now is like, you know, do you trust the results? What were the inputs? How did it decide what to get to at the bottom? But now, if you're going to take that away, like Priceline, TripAdvisor, Expedia, these are all places where you type something into search, into Google, and they were arbitraging. Like the largest fees on the U.S. economy aren't credit card fees. It's advertising fees to reacquire your customers through the platforms over and over again, right? That is the biggest thing that's at risk right now. And that is the basis of the internet economy.
So are you thinking of it as a builder, okay? Like, and again, and I know that like advertising, and one of the things in a lot of the companies and a lot of the entrepreneurs that you advise, you actually think about it through the lens of the business that you know. You built a business, you sold it, you've run a big ad network, at that sort of thing. Are you thinking of it in that way? Because Packy, I get a sense that you're thinking about it a little bit as a VC and a lot of the companies that you advise. And so I'm just curious, like, how are you guys both thinking about this a little bit?
I mean, yes, as a builder, although I will say to kind of the point Packy was making about the plugins, but maybe we even skip the plugins, and you're just going to ask all the airlines directly, why do we? Finding the investable part of it's been hard.
Totally.
The buildable part I found to be very interesting to say, what is going to build brands and what's going to change things? You know, we talk about world of molecules versus world of bits, right? Yeah. And so the only thing that will be physically eliminated, real world experiences, time, like what you do with it. And so I've been looking for things that are businesses that were not venture investable before, but AI is going to improve their business flow fast enough. So like maybe it was a linear growth business before, but it's a real business, and now it can accelerate, and it could have venture like some. So that's interesting to me, but it's hard. It's not easy to find right now.
Yeah, completely agree. I think, I mean, I'm definitely not looking from the builder perspective on this. Like, I'm really trying to do the analysis thing and just figure out what's going on out there and what it means for the different types of companies that have done well. Even before this kind of AI boom, I've had this sense that like, I think it's going to be really hard to build SaaS businesses or software-based businesses now that are as big as the ones built in the last decade, just because it's become easier to build software. The API infrastructure is better. There's just a bunch of things that make it easier to do, which means more competition, lower margins, all of less attention to any one of those products, more money spent on advertising. And so seeing this was like another just kind of point in the favor of that idea that it's going to be really hard to build these big independent software only businesses because they can be these plugins. It's amazing for consumers because I think prices are going to drop. People are going to have their preferences matched even better. Like all sorts of great consumer surplus is going to happen here. But just from an analysis perspective, these businesses that like obviously on paper, you're never going to do better than SaaS, like 90% margins, recurring revenue. It's like such an obvious thing, but I really think the next decade is going to be tough for building pure standalone software businesses that get that scale.
It's like you're going to have to find the leaders. So you know, in the venture, especially when you're a super early stage where human is, and I know where you invest as well, you're investing in the people and in the space and believe that they're going to adapt because I don't think I've ever seen a business plan or a PowerPoint deck that ended up being what the business was like 8 months later, 9 months later, because the world's going to change. And now the world's changing so fast, you don't know what it's going to change on top of. But the one thing I would say is the Bill Gates, the Mark Zuckerbergs, even the Elon Musks, don't be triggered, Dan. Like they were the apex. They were the apex archetype of the engineer because for the last couple of decades, the thing that was the constraining factor on building tech was engineers. So if that's not the constraining thing going forward, if one 10x engineer is now a 100x engineer because of Copilot and AI, so if that's not the hard thing anymore, what's the hard thing? And part of our bet is, and what Heather and I think a lot about is, it's the humanities. Like, there was a whole time when people were like, oh, too bad you got that liberal arts degree, go learn to code. Now I'm kind of wondering if it's like, hey, you might want to learn some things about human insights. You might want to learn some things about hospitality. You might want to learn some things about making a physical good in the real world and craftsmanship. You might want to learn some things about brand building. And so I do think that those become the hard things. And we don't really have filters for those type of founders. We have filters for, the single coder founder who's going to build you everything in their garage. And then how is that going to interact with people is a little different.
Yeah, but so out of the gate, like I think in December, January, there's a couple like billion-dollar companies minted, you know what I mean? Like the ex-OpenAI or ex-Alphabet people or whatever, and Andreessen led that round in Character AI. There was Anthropic. There was like a few others. Like, how do those work out? Aren't they born into a grave in a way? Like, if you think about like how do you like go from $1 billion valuation and do you guys just admitted it's gonna be really hard if you're just investing?
We're not in those rounds, or at least I'm not in those rounds.
Those are all. I mean, I'd say the foundation model bets. You look at something like OpenAI. If I'm right on the Apex aggregator thing, and if they do go the maximum capitalist version of that, that's $1 trillion company, at some point. And so if you invest in 100 things at $1 billion valuation and one of them becomes $1 trillion, like it's pretty good.
But don't they just gobble up the engineers in a way that might build that next, you know what I mean, like $1 billion, you know what I mean, like from 0 to 1 billion, like these are being minted at 1 billion. I know that may sound kind of stupid in a way, but like guys had to toil, or gals, and they toil away for a while, pre-seed, seed, A, and now we're just kind of jumping that whole process a little bit. Because won't they just acqui-hire everybody? Isn't that what the war chest is for?
I mean, like this is the question. Like, is it going to look the way like it used to look with platforms and the things built on top of platforms? Like these feel a little different. like this isn't like AWS where now you have cloud capabilities, so now anybody could build this a lot easier. They don't need to have racks and servers in IT department. We don't know what sustainable businesses can be built on top of it. And by the way, if you ask them, they don't even know. Like I'm not even sure Sam Altman would sit here with you and say, this is what it's going to look like in 3 years, people building on top of us. And if you don't have a lens that far out, like, I mean, I will just say, said it tongue in cheek, but truthfully, like we are still looking for people who want to do the same, take seed money, build, show you're adaptable to the environment around you. And then as they adapt, put in a real seed round, right, or an A round, and like continue to build its capital as needed on whatever the current platform looks like, and that being real businesses in the real world and brands that people will trust. And like, what are goods that are not correlated to what's going on in the environment in tech, like healthcare. Like you're going to spend as much money as you can on healthcare. So I think in your post was an excellent like point, which is there are so many things that have hidden demand that people will just take more of if it gets more efficient. So you use the traffic example on the plus side, you could say healthcare. It's like, I'll take as much healthcare as I can get if it keeps getting more efficient, right? And so let's invest in people who are making healthcare better for people to use, and AI will make it better. But they have to have a real business. It's not just a healthcare AI business. And I think that's the difference.
Totally. And I think even on your foundation model point, like there might be some differentiation across a bunch of these where there's a healthcare focused foundation model, or Bloomberg did their Bloomberg GPT that is a finance focused foundation model. And so there's probably a bunch of room. It could also be a race to zero. It's not actually like scaling doesn't actually make them very much better. And then you all get to the same spot and there's a bunch of open source models coming out. And so maybe all those billions are worth zero, but I think that's absolutely right that there's going to be a ton of demand for people building on top, things that add actual value, create products in healthcare, help design, future. Like there's all these things that are tangible businesses that are now maybe a little bit more possible that are going to be building on top of these. And I think the opportunity set is just so large that I think what's happening is you're just playing seed on some of these, just at like a 2 orders of magnitude level higher, because the outcome could potentially for some of these, if any of them do win, be 2 orders of magnitude higher. And something
it's funny though, you just said like it's going to be $1 trillion company, and until a few years ago when Apple crossed that mark, and then we had obviously Amazon and Alphabet and Microsoft do it in short order, and it seemed like Nvidia was going there and Tesla was above $1 trillion mark. Those just seem like numbers that are just crazy. And today there's a headline out, and it's not even a confirmed headline, is that Samsung is considering dropping Google search for Bing search because of these built-in capabilities. And and immediately Alphabet stock was down 4%. And again, we started talking about all this stuff because of the ChatGPT and the Bard rollout. You remember a couple months ago, and there were $100 billion market cap moves that were happening here. And to me, those seem kind of crazy, because even if Samsung was going to drop, Alphabet, they would absolutely have a leg in the door there. It's about their market share on handsets and all that sort of stuff. But it might not even happen for 6, 9 months, 12, a year or something like that. And people are shooting first, asking questions later. That also seems to be what's happening in the private markets right now. So I'm just wondering, from where you guys are in early stage, I mean, you guys are writing, you're talking here about this stuff. Do you see opportunities? Are there going to be reasonable opportunities? Are you investing, not you individually, are people just investing into like just a bubble right out of the gate?
I mean, I think there is. I think that we aren't looking for things that lead with like we keep saying, so we're focused super early stage, mostly New York City, although like some investments Miami and LA. This idea is there is a lot more talent out there right now from people who said, okay, maybe big tech isn't where I'm going to be comfortable for the next 5 years, so I'm willing to take a risk right now. There are some people who just like their divisions weren't what the big tech was focusing on anymore, but they're incredibly talented people. Office space is cheaper in New York City. I mean, I feel like it's like a amazing kind of formula right now for starting things up. And thinking, when you're super early stage, you're on a 5 to 7 year horizon. I don't even know what the world's going to look like in 5 to 7 years. So all we're looking for is builders who are excited to learn what the world's going to look like in 5 to 7 years. And they're leading with a real world problem. They're leading with how do restaurants get their deliveries like on a Tuesday and more efficiently like pay their bills. And maybe there's an AI application to that and they're open to that. How are people going to gather to watch movies? But maybe there's something on the marketing and invite. Out-of-home advertising, which I sit on a public company board of, but like watching that's a physical space. It can only get smarter in what it's doing, but it's still limited physical space. So I think that there's lots of areas that are still interesting. I think you can't lead with the technology and then look for the solution, right? Like you have to lead with like, what is this solving? And now can the technology do something to better it? By the way, if not, do the hard thing. Yeah.
I think there's a total bifurcation as well. Like I do think it makes sense to seed some of the very best people out there. Like the amount of really good AI researchers is still one of these really, really, really scarce resources. So it makes sense that a lot of them are raising at higher valuations. And then I think it makes sense to write a lot of small checks into people experimenting early on. And that can be tech-led and not problem-led, and like throw $100K at somebody out there just like tinkering around and seeing what they come up with. Who knows at all if it becomes a viable business or something that has moats or whatever. But I do think this like fun experimentation process that we're in right now, funded, not funded, the auto GPTs are these open source projects that people did on the side of their desks. These agents that can like kind of talk to themselves are things that didn't take a lot of venture funding. Who knows if they become big businesses, but I don't know. I like these bubbly phases because I think no matter what happens out of these, I haven't done an AI investment out of Fund 3 yet because I do think it's really hard, and that's why I'm writing and not investing as much. I'm trying to figure out what's going on here. But I do think this period where there's a lot of attention, there's just going to be such cool shit built that wouldn't have been otherwise if there weren't all this frenzy.
Packy, do you think there's some lessons? And again, I think it was the summer of 21, and you were doing, I thought, some like amazing work on Not Boring. And I remember, I think it was the post, it was Nifty Corporates, and it was about like Visa and it was about Visa, right?
Yep.
Like they bought some NFTs.
And Budweiser got involved.
Yeah. And to me, what I thought was amazing about those pieces, you didn't have a strong bent one way or another. This wasn't going to change their like marketing, but they got a lot of free press. They opened the door to a lot of different, I just thought, like, to me, that was really interesting. And we started covering some of that stuff on CNBC, and we started talking about it on the pods. What do you think some of the lessons are about some of the big, let's not even, we're going to get to the platform companies, we're going to get some of the big advertising models and stuff. What do you think some of the lessons for corporates are going to move too quickly into bad chatbots? Like the one that you gave, it was the wallet, it was the Budweiser wallet where all of a sudden they're getting like tons of dick pics and stuff like that. You know what I mean? Like there's got to be some good lessons as far as like the way companies are thinking about how to use some of these technologies right now.
It's really interesting. It seems like right now, I mean, like Bing was the one that took the most arrows, right? They came out with this thing, Sydney, their Bing chat that was completely unhinged. It seemed like they took it offline, but kind of totally fine with it. And I think it probably created some of the hype that leads to Samsung maybe replacing Google with it because it got all that attention. I think there's enough of an environment of building right now, and there's enough of the models that people are building on top of, at least are, OpenAI is spending a lot of time and money to make sure that it doesn't say completely inappropriate stuff. It feels safe enough that if it says like kind of wrong things, then you just say, our thing says kind of wrong things, but like it's pretty helpful. Or as long as you like kind of back it into the right, you set the right expectations with the users and say, it can do these kinds of things, it can't do these kinds of things. I actually think it's pretty low risk to experiment with because people kind of understand what to expect from these models. Now, I think you really have to think about who your users are. If your users are, my parents are having fun with this stuff, but like,
are they really?
Yeah.
Your mom, Joe?
She'll send me stories on it.
Yeah. But like, if there are people who are not maybe as interested in cutting edge tech or would be confused by chatbots, like maybe don't just throw it in to throw it in. I don't think Budweiser or Visa would have done that either way. Like they were very much targeting a certain group. But I think it's this kind of period right now where it's fun to experiment and kind of see what happens as long as you're not like risking the whole company's product on it.
Right. And going back to trust, Joe, because you had a quote in your post and I thought it was really interesting. And without trust in brands, and I think you kind of alluded to this, there's an existential risk to businesses, governments, and the people that rely on them. So like let's talk about that because again, like I think there's been all this call for like regulation and people don't even know what should be regulated. And then there's this group that put out the open letter, and I think Musk and Eric Schmidt, and there's a whole host of really smart folks that are really concerned about this. I mean, so let's talk about trust right now because things seem to be moving a mile a minute right now.
Yeah, this is the part that I am very rarely pessimistic when it comes to tech. I think we'll solve the things that it brings, the negative externalities that came with social media. We solved to the best of or we mitigated to the best. Some terrible things happened, but we did our best with it. Still connected people. There are things to consider with this that I think we think are utopian and they're actually dystopian. Meaning, if everything's personalized to you, where like then Dan gets one story, Packy gets one story, Joe gets one story. What do the three of us talk about when we're all in the same place? No, I'm like we all talk about the weather because it's the only thing we're guaranteed to have all experienced on the way in here today. So shared experiences are how we decide we agree on things. We already see what's happening with politics, where you have one source of news, I have another source, and you have another source of news. Pretty tough to agree on things. And so let's go even further where we just keep getting more and more micro, more and more niche. Everything's customized to everybody. And like it fractures a little bit. Also, brands are not built the way people think brands are built. Like Built Ford Tough, just because I know that message, if they customize a message just to me for Built Ford Tough, but you don't know it. Or even worse, I don't know that you know it. Maybe you do know it, but I have no idea if you know it. Well, then I'm not badging myself with a brand anymore. And so how you decide how brands get built is like you have to have shared experience of a thing. And I think a lot of the brands who've like hyper-personalized, and that's why on Instagram, that's why on Amazon, they reacquire their customers over and over again, but they aren't building a brand for the long haul. Because until two people know that each other have a shared experience, so think about that for corporate brands, but then think about that for government brands. And I tell every one of our founders to think about that for their brands. Like there's a reason why a billboard works. It's because it has a meta piece of information. Everybody else who walks by here sees this. Doesn't say that on the billboard. Be a cool billboard if it did, but that's a meta piece of information. So like when it works, it's not working with just your target audience. It's working with your target audience's friends, colleagues, co-commuters, right? And so AI is going to change in things besides out of home, although if we get to the Minority Report future where it's customized to you on out of home, that'd be pretty cool too. It's changing what I know other people think of as stories. Like everyone has we already have our own Twitter feed. We already have our own Facebook feed. We already have our own Instagram feed. If our stories start to get so customized that we don't share them, like we can't talk about what happened on a show the other night, there is something more dystopian than utopian about it.
It's a really good point. I even wonder though, if that same kind of dynamic or that same bounce back that happens with all those other things that we figure out, like when we're in this moment right now where it looks bad, one of the ways that I always think about future tech and whether it's going to be utopian or dystopian is that we kind of have to opt in. So what you're talking about does sound kind of miserable. Like I'm watching a show that's only designed to me and I can't, like half of the reason I like Succession is I like seeing the memes and I like talking to other people about it. I'm going to choose to watch stuff that I know other people are watching in terms of stories. Like hopefully the story isn't completely different for everybody, but maybe the way it's delivered to you is personalized in a way that you can grok and understand better, and you can maybe even understand more. I know I'm being overly hopeful on this, but like I'm going to choose things that provide the best overall experience, even if like the particular piece of content isn't as tailored to me as possible, because I want to talk to you about it.
Yeah, no, that is the hope. That's what you want to see. Now, obviously, we don't want our news to start going down these pathways, which is why that's more disconcerting. For companies that are doing advertising, though, it's something to think about with. Like AI will provide, people talk about this future where AI will do thousands and thousands or millions of creative implementations, test them all on Facebook, whichever one works. And that, yes, but there's something about storytelling that is the role of us saying, like, AI is built off of large language models of the history.
Yeah.
It's not. So there's something about culture replication versus culture creation that I think is the role of great brands, and it's where they begin to occupy in the world. And then they have irrational followers to some extent. And now those irrational followers are what build the brand, and we get to talk about them. It works in religion, works in government. I'm telling you, it works the same in like consumer brands or even enterprise brands. Like, okay, you don't get fired for buying IBM, like because everyone knows what it is. So I'm hopeful for that. It does feel like we're going to go through a bump in the road, like we did with social media, where there were negative externalities. But but think about the time in which those things occurred. It's now going to be like this. Like it'll be in months. Like that Drake and the Weeknd song that came out. I mean, this, for anyone who hasn't seen it, is like fully AI created by a ghost. He actually calls himself Ghostwriter on TikTok. Wears a ghost sheet over his head. It should be sending shockwaves through the industry, because I could just be like, here's all my favorite music. Just make me stuff that sounds like these people, right? And it's not even rights management, because I could just be listening to it myself, right? Like, how is this all going to work? We don't know. It's just, how are we going to catch up as with copyright law, with legal precedent? I don't know. And that's
here's where I like legitimately why I wrote a piece a couple of weeks ago about how crypto I think is still like really good insurance and really useful, and then this thing comes out where it's like, cool, I'm Drake or I'm the next Drake, and Drake's already in with UMG, and it might be hard to do this, but like, cool, here's my voice. It's an NFT. If you have this, then you can mix it. Like, I do think there are some spots where proving ownership of a thing that also lets people do something with it can be really, really valuable.
We would go far off the rails there, but like that is what the record label like rights management database should have in it, right? The problem is, a human being, I as Joe, I have no musical talent whatsoever, but I have grown up listening to Drake, and I've listened to Biggie, and I've listened to this, and now I come up with a song. Like, how do you possibly parse out like everything that's happening? Like the craziest part about AI and the way the next predictive like word system works with the tokens, ironically, is that they don't know what comes out of it. Sometimes the researchers themselves are like, yeah, I'm not like what did Kevin Roos say after the Sydney debacle? He's like, when we went back to Microsoft to ask them, so about this whole Sydney telling me I should leave my wife thing, they're like, yeah, we're not really sure how it got there. And like that, like think that, but with like creative work. Think that with like saying, prove that I use these artists to do it. And
but you're talking about choice, and it brings me back to Renton. Choose life, choose a job, choose a career, choose a family, choose a fucking big screen TV. And you know what's crazy about Train Spotting? You're probably too young for that.
I know Train Spotting
a little bit. I mean, that was 1996, and it was all of this stuff. And you think about like Fight Club. It was all about consumerism. It was all like those movies. You know, OK Computer. You know that album. You know what I mean? In 1997, and here we are in 2023. We're like grappling with all these things, and we actually haven't even figured them all out yet. So we talk about that whole idea of being optimistic and it's going to work itself out, or we like all the sci-fi and all those movies back then and all those books and everything like that. It was about, oh man, if we don't figure this stuff out, it's going to choose for us. And that's really what we're talking about here a little bit, huh?
We are. And that I think it's both exciting. Here's what I do think is exciting. So for all of the terrifying part that the business model of the internet is broken if advertising is flipped on its head, advertising as the dominant business model of the internet was a terrible thing in a lot of ways. I mean, I'll just start with listicles, just adding impressions to add impressions. It didn't do anything for the user. So that reset isn't bad. It's just what's the transition look like? And in the meantime, how do you build brands and I mean, think about where advertising got us to towards the end, where there's nothing but affiliate marketing, like basically drop shipping very cheap goods from China, and the highest margin is what got bought, like because they were the best at marketing. Very rarely is the best at marketing also the best product. Like it's just the two things don't necessarily go hand in hand.
Interesting though. So Packy, you are optimistic. You kind of think that OpenAI is kind of in the driver's seat here a little bit as we think about just kind of the tech in general. And let's talk about like these large platform companies, because I think, again, you know, I mentioned the Google thing, and we saw Microsoft and Alphabet trading $50 billion, $100 billion on like different headlines, whether it was Bard, it was Sydney, it was this or that or whatever. And it's interesting also to think that Kevin Roos stuff was like, he came on Fast Money. I mean, that feels like a year ago. That was, it doesn't it? And to your point, Joe, it's like it probably worked out for the hype. I think you just made that point, because none of us are particularly even worried about like, you know, that Sydney trying to like get us to kill our wives and marry her or anything like that anymore. It's now we're just laughing about it.
Yeah. So I think on the OpenAI front, they're clearly in the lead now on the model side. Plugin seems to be the most inventive business model. It's hard to bet against the assets and the resources that a Google and a Microsoft have. Like, that same set of resources that Google has with a different culture and team, I'd be like, yeah, no problem. They're just going to plug this stuff in, change the business model, do X, Y, and Z thing, and they have billions of users who come to their site every day still, and now they can just direct them to plugins or answers or whatever else. I think two things, it's been well documented that the culture is a little bit stagnant at Google now, and it's hard to change, and they optimize for safety and all of those types of things. And then, like, you do have to sympathize, and I don't know if this is innovator's dilemma or not really. I'm like looking for what this thing is, but to have the best business model in the history of the world and then decide in a couple of months, like, all right, that business model's out the window. We're going to go to this other thing that gives us answers and we don't have these blue links anymore. That's like a really hard thing to do. So the question is like, can they get to something completely that fits this new paradigm before OpenAI can get to their scale, I think is the question.
So Joe, a lot of people have been really critical. I mean, to your point, Packy, is like all of a sudden they're being forced to actually rethink this model where they've gained tremendous amount of market share. No one's been able to touch them. If you think about where Bing is in search, it's like mid-single digits and it's not been growing ever. And so that goes back to that Google headline. Just think about, or the Samsung headline, think about this. Android has like 80% global market share as far as like mobile operating system. And, you know, obviously, Google has just been embedded in all of that as far as search is concerned. And think about how much Apple actually pays Google to actually be like on their phones. And they're like, so like all of a sudden, the ground's moving below all of the feet of these major platform companies. I mean, do you see an alphabet reacting inappropriately in a very short period of time, which actually just kind of like seals their fate in some ways.
I mean, it's way over my pay grade to decide whether or not like they're reacting rash or making some mistakes.
Like Sunday's head right now. You know what I mean?
But
like,
yeah, and I look, if I was a large investor, an institutional investor, I'd sit here and be wondering like, okay, where's safe? Because like, you know, we see the rest of the stock market doesn't look very safe. So like there's a flight to safety, and the thesis is that, well, there's so much infrastructure, but there's so many engineers, like you need the tens of billions of dollars to be able to do it. Potential counterpoint to that is you could commoditize all of it, right? This goes back to what I was saying before. Like it used to be that you needed, I mean, maybe server space is the thing, and which would be super ironic if Web3 and crypto, like the call to build all the servers, built us all the server infrastructure we needed later to service all these AI models. But if like a lot of the things that are happening with these large language models are when you build a local instance of it, it doesn't take that much to run it. And 4 is better than 3.5, but not so bad. I've met a couple of founders who are building on 3.5 and why haven't you moved to 4? They're like, because we're just going to build on top of this. It's going to work fine for the narrow use case that we need it in. Well, they could get the exact same thing from Google or OpenAI or Amazon or Facebook. And if they become commoditized layers, that is the best possible outcome, because then like AWS, they won't be able to overcharge for it, and entrepreneurs will be able to build on top of it. And then I still go back to doing like, who's the people who are going to do the hard thing? With the platforms though, the thing that isn't figured out is not just advertising, just search in general as a way of navigating the internet, right? Chrome in the browser, like you type stuff in and it's really going through search to get there. Like that inverting is not something that we're ready for, because not just those companies you talked about, but every public company. I think right now, Facebook and Google, and let's add Amazon in, make up 60% of mobile advertising. That means all search, like all links clicked, all performance advertising. That means that like what percentage of massive budgets from public companies are reliant on them to hit sales quarterly numbers? Mm-hmm. And so I don't like, that's the part that we're not ready for. I mean, I get excited with startups licking their chops at like that all looks like opportunity, but like I don't know what that looks like yet.
Yeah. Well, all right, listen, let's kind of end this bit with like, what do you think if you're listening to this pod, Packy, and let's say you're just kind of, you're interested in private markets and you're worried about like kind of what the focus is going to be for the balance of 2023. You know what I mean? Like, is this something, is it going to be here? Are we going to be talking about this? Are we going to be doing another pod about this in 3-6 months or something like that? Or is it going to feel like it was just kind of a little bit of a ephemeral sort of thing? And I'm just curious, and then I'd love to get, from a public market, maybe like have a little conversation here, because this really is working its way into a lot of different narratives. NVIDIA's chips, the hyperscalers and supply demand dynamics and who's going to have access to them. I'm just curious, like how you're thinking, is this something that you think we're going to be talking about 6 months from now, the way we are right now?
I think it's hard to imagine that we're not talking about this in 3 to 6 months. And again, I'm the over optimist on all of this stuff, but even people who are a lot more level-headed have now come out and are just saying like, this is the thing. I mean, I think Nat Friedman, who is the GitHub CEO and is now kind of one of the leading early stage investors in AI, said recently something to the effect of, even if all the model development stopped right now, we have like a decade worth of figuring out how to build products on top of this to fully take advantage of what LLMs can do. And every week there's like a new thing that people are getting. It was plugins and then it's agents, and then next week there will be something else. And so it feels unlikely that in 3 to 6 months we're not going to be talking about this. That said, like, do I think that a lot of investors in the early stages are going to lose a lot of money on AI companies? Like 100%. Like I think we're going to have that dynamic, but I think the underlying technology is here to be talked about for a very long time.
Yeah, so I mean, Joe, like, you've been kind of vocal about this here and there, and people who know you, like a lot of crypto Web3 stuff you thought was really kind of a solution in search of a problem. You don't feel that way right now about like what's going on here.
I think that's pointing out the irony is if we built up all this infrastructure, but I think that, when you talked about crypto, and I was always curious, but like it was always solving the biggest problems in the world, money. I mean, it was like government. It was like new economic models. AI is solving some of the most boring shit you can imagine, right? It's solving workflows in organizations, which, by the way, could lead to our next round of layoffs, like joblessness. This is why, I point out in the piece that like we're in a Star Trek or Star Wars future coming here, right? Age of abundance or age of scarcity. And the Star Trek is it's abundance. We all have everything we need, but people get excited and they find new things to work on. There's hidden demand, or scarcity in that, well, I'm an employer and I just found a way to cut 10% of my workforce and keep my productivity at near 100%, or maybe I cut 50% of my work. This isn't like everyone was afraid of this with self-driving trucks because truckers make up such a large portion of the workforce. However, that is they can have no fail there. To your point about you could be wrong in AI and not be too bad, but you can't be wrong in a self-driving truck and not be too bad because it can hurt people. AI, they could be like, okay, I'll get some of my clerical stuff wrong once in a while, but I'll have 50% less employees. That's it's long-term abundance creation, short-term terrifying. Yeah. And I don't think we've ever had technology that was going to be short-term. Like the biggest hope I have is hearing, when people said the internet was going to improve productivity so much, but then people found a way to waste half their day on the internet, so it really fixed its own problem. I don't really see that here with this version of AI and companies. So that would be my one thing to look out for.
All right, stick around. When we come back, we're going to talk a little bit about Elon's Substack and maybe what might fix this. Packy's got a post out on it, so let's check it out. All right, we're back. Let's talk about what happened with Elon. He had a little hissy fit about Substack, and what I think is really interesting about this is I was never a Substack person. I subscribed to a bunch of Substacks. I've learned about most of them by people that I've followed on Twitter. Okay, yep. So Packy, you built a following on Twitter, and then you started writing a Substack. It became very popular. I'm assuming that you would agree that a large part of the ability for people to find your writing was your presence on Twitter. And so talk to us a little bit about what happened. What do you think happened here? And again, it sounds like Substack was going to introduce a product called Notes, which they since have. Yeah. And Elon thought this was a competitor towards, or a knockoff, I guess, on Twitter or something like that. So how did you find out that your nearly 200,000 not boring Substack subscription was not going to be able to be shared on Twitter? What did you do about it? How did you feel about it? And where are you right now on it?
Yeah, so I guess even to correct, so I kind of started writing before I really had any Twitter followers, and the two really grew in tandem. Okay. I viewed Twitter as a place that maybe sometimes it would go viral, but could also be the place where the community lived. I didn't want to have a private, not boring community. I wanted the conversation to be out in the public and people to share, and it felt really vibrant. I mean, the most popular piece that I've written probably is this post called The Great Online Game. And it was in praise of what you can do on Twitter.
And you actually said Elon was winning the online game.
I thought he was. And I think my other weird point on Elon, I think if you look back from 1,000 years, he's just been really good at accidentally or not uncovering all of these weird truths that, for example, that people can be both good and bad at different things. This morning, they almost launched Starship, the biggest rocket in the history of the world. At the same time, Twitter is turning into an absolute dumpster fire. And I'm a huge fan of what they're doing at SpaceX. And I'm not a fan at all of what's going on at Twitter. And I was. I mean, we were talking before on this podcast about the fact that I was optimistic about what Elon could do with Twitter. And I think I was wrong about that so far.
I mean, listen, it's funny. We were talking about, I think it was last April, and we talked about again in the fall. And I guess, for someone like you who used it so well, you know what I mean? Meaning building a community and being able to kind of gain thought leadership and then taking feedback and then looking and just seeing all the things, all the people that we've all collectively met on that platform. Yeah. But it does seem like a dumpster fire right now. I've been kicked off. You know what I mean? For an April Fool's joke, I was on it for 11 or 12 years. I built 100,000+ followers. I used it during live television programs to engage with people. I've met tons of people. Hopefully people felt my contribution was worthwhile. I do an April Fool's joke and I'm gone. And you know what? I'm out, man. I don't really care anymore. Totally. So curious, so Substack, they see it as competitive. You can't post on it. And what do you do about it all?
The way that we found out about it actually was normally one of the beautiful features of Substack and the integration with Twitter is that when I want to put a tweet in my Substack, I just post a link, it embeds, it's magical, it just happens. And we started doing that and getting pop-ups, the link would just disappear and get a pop-up from Substack that there was some sort of issue and they were working on it. This was the same time that they announced Notes, which does look and feel a lot like Twitter, except it's Substack writers who are able to post. And I've been using it a lot and it's great. But then you go to Substack or you go to Twitter and people who have Substacks with Substack in the name of their publication or in the link to their publication. So if it were not boring.substack.com, those links just, you can't like a tweet with those in them for a couple of days. Notboring.co worked. They didn't get sophisticated enough to see that I was on top of Substack as long as I was pointing to a different domain. But a lot of writers were talking about the fact that they just couldn't get any engagement on the tweets that they included anything. First it was Substack links. Then it was the mention of the word Substack or the @Substack Inc. handle. No engagement on those tweets. So for me personally, it didn't have any real effect.
Yeah, but hadn't you been noticing? Listen, I've noticed this engagement.
So that's what I was going to say.
Absolutely throttled over the last 6 to 9 months. I mean, like literally, like matter of fact here, it's become less important.
That's exactly what I was going to say next. So like, it didn't have any direct impact there, but it's just the latest. And this was actually kind of pre-Elon, I think. Like anytime you put a link before, it's still like they want you to stay on Twitter, and the algos are kind of, I guess, favor that kind of behavior where you're posting a thread on Twitter versus sending someone to a link elsewhere. But it really has just become like, Twitter is really good for the ego, and like I'd love to see a tweet go viral, but then I see a tweet go viral and I look at the traffic sources on my Substack and it's like 96% email, 3% direct in Google, less than 1% Twitter. Even if it goes viral, it's just like, I guess at the scale of the newsletter, not a particularly huge source of traffic. It just feels good. You want to be able to have the conversation. You want people who might enjoy the content but not subscribe to your newsletter to be able to follow that thing.
Content was the product. Like that was it, right? Yeah. And now it's not, Joe. So talk to me like, and you know, I have a story up here from Bloomberg right now about, I didn't even know this happened, but Elon Musk's Twitter payment plan puts NYC subway alerts at risk. So like literally if they don't pay 250 grand for their gold check and this and that, whatever. And a lot of businesses are just not going to do it. I'm not going to do it. I don't believe that all the content that we've been creating on there, that we're the reason why people are actually signing up, right? To kind of engage with you, whether they like your TV show or your newsletter, or your podcast, or whatever you have to say. Like, so to me, I just feel like it literally, this is kind of the tip of the thing. And I really feel like a lot of these businesses are going to be off of it very soon.
Yeah, look, I will, here's what I'll do. Like, I agree with all of this in principle, but for devil's advocate purposes, here's the benefit of the doubt thing that I think was the trap in getting when Elon bought Twitter and what we're all discovering now, but it's true 100% of the time. Media has more value in the world than it can be monetized at. Like, I could imagine sitting around one day and be like, Twitter's worth more than $44 billion. Nations rise and fall on it. Governments are decided. Like the New York City Transit Authority communicates with its riders using Twitter. But you can't monetize it, right? Like, oh, hey, the New York City Transit Authority is a multi-billion-dollar, like maybe one of the most complicated transportation networks in the world, more riders per day than any, I mean, up 20.
Well, Jack thought it should be a protocol, though. Well, I mean, that was one of the reasons, and that business was being run into the ground by him before Elon bought it.
Sure, but this is my point. Like, this is the point, which is it is a more influential platform, just like radio or television or all the, but like they're not monetized at the rate at which like they're valued like in society. Like things that create culture are very hard to price. Things that like shape governments is very hard to price. And so, you know, if you're Elon, you're sitting on that going, hey, I don't, you know, famously, he doesn't actually spend money on marketing. He launches rockets into space, like pumps Dogecoin, and now he owns Twitter. So he doesn't need to spend money on marketing. Now the new argument will be he spent $44 billion on marketing. So it's right up there with Ford and GM. So I get that. The other one is like, you know, it was very funny when everyone with the blue check marks were getting very upset that their blue check marks were being meshed with people who paid for a blue check mark. So I don't really use Twitter. Like, I don't create original content. I kind of made this rule a long time ago with Facebook. I was actually back still in the days of Facebook. I was like, I just don't like creating original content for platforms, although I've started to use LinkedIn a little more. But I do retweet Heather, who's my partner at Human Ventures. I retweet all of our founders of our portfolio because I had 10,000 followers from my years of writing in the ad industry. But I got very little engagement. And so when it was like, oh, $8 a month to sign, I was like, I don't care. Like if it helps any of my companies with one person.
You've seen it. It's like it's like mid-single digits people have paid, like as of whatever that was. And that, so he's got April 20, is going to be when they're kicking everybody off.
I don't get it.
20, you know, in the 69th minute of the, you know, whatever. So like, listen, this is what's, he just marked the company down to $20 billion. Okay. We know that their like ad revenue was down like, I don't know, like 40% in I think on average in Q4 or something like that. Advertisers don't want to be there. A lot of power users don't want to be there. The situation with Matt Taibbi, which was the guy who was putting all of this, like I think was misinformation, these Twitter files, out there, and he's off of it now because his livelihood was being made on Substack after doing all this dirty work for Elon and everything like that. So he's off of Twitter. And I got to tell you, do we know anybody at like Yahoo or something like that? Because if the people at Yahoo are not working around the clock, given all of the traffic that they have and all the command that they have with advertisers and everything like that, you know what I mean? Like, or Facebook or Google Plus or something like that. I mean, it just seems like
if Yahoo doesn't immediately take Alta Vista, because I wanted a T-shirt that says Alta Vista should have won, because that was my favorite search engine for Google. Let's go.
But it's not just about search. It's about the combination of search. It's about advertising, about safe spaces, about about social. You know what I mean? Because listen, Substack is small in the grand scheme of things. So Notes could be hugely successful among the people who subscribe to like the 500 Substacks that matter. I mean, like literally, that's it. You know what I mean? Like, so it's got to be a large platform company that has this sort of user base and traffic and all that stuff to really make it happen. You know what I mean? And so an alternative has to rise.
That's one possibility. Ben Thompson wrote about this at least a year ago and then kind of rewrote about it recently, that the future of social is kind of small, and a lot of his activity is going into group chats and different places. And he wasn't super bullish on the way that Substack Notes launched because it maybe wasn't differentiated enough. But I do think there's a version of the world in which Twitter dies a death by 1,000 paper cuts. I'm on Warpcast for crypto conversations. I'm on Notes. I'm in group chats. I'm in all of these different places, and it's not particularly convenient. I think probably at some point maybe someone just builds a layer on top that aggregates all of those. Text.com maybe is a potential kind of company that could do something like that. But I am finding that the communities that I'm in are moving off to maybe more specific platforms, and there's not going to be any huge crash of Twitter or something where everybody just quits or the service stops working. But I'm spending a lot less of my time there now. I deleted the mobile app, although sometimes
I did too.
I know Tim Urban said that like he did the same thing and then just used the mobile browser version a lot, and I've done the same thing for sure. Like if I write a piece and I tweet about it,
you're more productive actually.
I'm way more productive. I'm happier not checking it. Like there's rarely a time where I go on Twitter and I'm like, I feel so much better right now. Like the best thing that, the most likely outcome is I go on there and some like random person with 6 followers who I've never met before said something awful about me.
I just want to make one really important point here. So I actually agree. I think some of these verticals, and this is something, Joe, you and I have been talking about for years now. Okay. So like think about this. I go on in the morning and there's people like Carl Quintanilla from CNBC. He is power tweeting every important piece of research, every important piece of market news, and he's doing it. It is this beautifully curated RSS feed if you have the right people. But then you have everything else. And then you have every other tweet of stupid meme that Elon puts out or this and that, whatever, dominating. It was the same way under Trump. And that was the thing that made me believe that it cannot be sustainable like this or whatever. So then you go back to what I just said about Yahoo, Yahoo Finance, Yahoo Sports, Yahoo News, Yahoo Entertainment. These are things that people go to. Right. They all have hundreds of millions of people in traffic. And that's what the Notes should be about, your ability to create communities within them and share the sorts of notes. And that's why it's got to be a big platform company that kind of supplants them.
It's hilarious that like so actually, as you were talking, it gave me an idea for a new startup in the AI space that I'm actually very excited about. I will share as soon as the mic's struck, because I'm going to have someone hack around on this at Human. But the idea that everything that's old is new again, Yahoo was a homepage curated by people of websites that here's where you should go because you can trust it. So like could search become a thing that is like, okay, we will have filters. When search first started, there was a huge argument that the Wall Street Journal and the New York Times and everyone shouldn't have their stuff indexed by search because like they were getting it for free, and then that became the new front door instead of you going to the brands you trust. In this new world, it's like, I don't know that I want to ask questions to something that's faceless that I don't know where it's pulling from anymore, right? So will editorial become an important layer? And will that be the thing that is differentiated and be like, okay, I'll go in the front door here, right? It's our Shatner, low price guarantee, Priceline Negotiator, except for like truly trusted people or brands that say they'll curate this for you. I mean, huge fan of like The Skim, right? Which has been a newsletter that is curating in the morning, but really what they're people are saying by reading the skim is, I trust you that you're going to curate down to what I need to know today because I can't read everything, right? So what about that for everything? Like can AI do something interesting so that editors can be, you know, they talk about 10x engineers.
Whatever
Artifact.
it is. Yeah, Artifact. I mean, I think they're trying to do that. You know, and there's a bunch of chat things. I think to your point about Ben Thompson, I was listening to him last week. They're using wavelength for chat among community building. You know, you and I just met a guy, Mike Sue, who's working on something really cool too.
Yeah.
You know what I mean?
Oh, you like that? Good.
You showed it to me.
I know.
I talked to him last week.
I haven't talked to you since.
I'm going to introduce you to him. So
there we go.
No, I think there's a lot of really smart people who see a lot of what we see, but they're still on Twitter. You know what I mean? And I'm not trying to encourage anybody to leave it. I'm just not there. It's not something for me anymore.
I do encourage people who. I'm still there for our portfolio companies and for our business, but I do encourage people to spend a little more time. I know it has a spam problem and I know it has a hype problem, but LinkedIn is probably the most valuable. Like for us, when you were listing your traffic sources, I would have thought like LinkedIn would have been in that between the 2 and 3% from Twitter and Facebook.
I don't use it, but I've heard good things from people who've grown their newsletters really fast about using LinkedIn.
Because they have profiles. Like if the hilarious part, I don't know if this is like funny haha or funny hee hee, but like the idea that LinkedIn's the last place with profiles, right? Like Instagram and Snapchat, but like it's the last thing that has profiles where I can go see what is Packy doing these days. Oh, this is what he does. It's an insane that this is where we've ended up after Facebook and Friendster and MySpace and
forever. The Twitter profile and your like Twitter homepage is the least like the area on the internet that should be developed just so much more than it is.
Easy, right?
So easy. And they just blew that. Yeah.
All right. So we're all in agreement. We're off Twitter. Elon screwed the pooch. You know, hopefully he'll get that spaceship up sooner or later.
And it's probably the first thing I'm going to check after we get off. You know, like
Not me.
I'm also still slightly addicted, but less addicted.
I'll promote this podcast on there for you.
Okay, fair enough. Amanda will do it for me. All right. Listen, Packy McCormick, Not Boring, Joe Marchese, Human Ventures. Thanks, guys. That was a lot of fun. Let's do it again soon.
Done.
Thanks for having us.